ladies and gentlemen. Good day and welcome to the Windlas Biotech Limited Q1 FY26 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is now being recorded. Today on the call we have Mr. Hitesh Windlas, Managing Director, Ms. Komal Gupta, CEO and CFO. I now hand the conference over to Mr. Hitesh Windlas. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us today for our financial results for the quarter ended 30th June 2025. We have uploaded the press release and investor presentation on our website as well as on the exchanges. I hope that everybody must have gotten an opportunity to go through it. Initially, I would like to discuss the outlook and way forward for Windlas Biotech, followed by financial highlights for Q1 26 of the company, which will be shared by our CEO and CFO, Ms. Komal Gupta. This quarter reinforces our strong growth trajectory, marking the 10th successive quarter of record revenue performance. The company reported an earnings per share of 8.4 for Q1 FY26, marking a 30% YOY increase. In line with its commitment to shareholder value creation, the board paid a dividend of rupees 12.2 crores, equivalent to rupees 5.8 per share, to its shareholders for FY25 in August 2025. The Indian pharmaceutical market registered a YOY growth of 9% in Q1 FY26 with a modest volume growth of 1%. We delivered 19.9% YOY revenue growth for the quarter, driven by steady contributions from all three business verticals. Our generic formulation CDMO vertical continues to deliver healthy performance driven by customer additions, expansion in product portfolio, and consistent delivery of quality manufacturing products. The trade generics and institutional vertical sustained their growth momentum through deeper penetration across core and adjacent markets, supported by government healthcare schemes such as Ayushman Bharat and Jan Aushadhi. In exports, we are actively pursuing several strategic initiatives aimed at meeting the increasing global demand for high quality and affordable generic medicines. On the manufacturing front, we are strengthening our operational infrastructure through the upgrade of our recently acquired Plant 6, which remains on schedule for its planned capacity expansion. Additionally, our injectable facilities enhancing our ability to serve diverse customer needs and deliver a wider range of products efficiently. As we move ahead, our outlook on the broader Indian pharma sector remains optimistic. Our focus remains on driving long-term value for shareholders by boosting operational efficiencies, nurturing key talent, and expanding our dosage form capabilities. I will now request Ms. Komal Gupta, our CEO and CFO, to discuss the financial performance highlights. Over to you, Komal.
Thank you, Hitesh. Good afternoon, everyone. On the back of performance momentum seen consecutively across last 10 quarters, we delivered another quarter of consistent performance with revenue of 210 crore rupees, EBITDA 27 crores, and PAT rupees 18 crores. The company recorded 20% YOY growth in revenue, 27% in EBITDA, and 31% in PAT. The company's gross margin expanded by 71 bps YOY to 38.3%, while EBITDA margin improved by 70 bps to 12.6%. Windlas Biotech is strategically focused on strengthening core capabilities and expanding into high-potential geographies to meet evolving market needs. Through disciplined execution and operational efficiency, We are well positioned to drive sustainable growth, enhance competitiveness, and create long-term value for our shareholders. Our generic formulation CDMO vertical achieved growth of 17.8% YOY, contributing rupees 160 crores in revenue. Our continuous endeavor to ensure delivery excellence and stringent quality standards strengthen our positioning as a trusted CDMO partner in pharmaceutical industry. The trade generics and institutional vertical grew by 25.2% YOY to rupees 44 crores. This growth was driven by enhanced distribution reach, stronger market presence in previously underserved regions, and increased product range. Exports vertical registered 45.4% YOY growth to rupees 6 crores as we continue to deepen our presence in key regulated and semi-regulated markets. As we progress through FY26, the company remains focused on driving process enhancements and strengthening internal efficiencies. We are currently witnessing encouraging trends across all business verticals. Backed by a differentiated value proposition and strong customer engagement, the company is optimally structured to unlock its long-term goals in a sustainable and impactful manner. That's all from our side. We can now begin Q&A session. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhanil Desai from Total Capital. Please go ahead.
Hi, good afternoon, everyone. Congratulations for a very good set of numbers. My first question is, how is the ramp up on the injectable side? And also, if you can help us with the utilization and how do we see the ramp up going ahead? And a question tied to this is that our gross margin have expanded, significantly. So, when do we see the full benefit of, cost absorption of the new plant, as the scale up happens on the injectable side?
So, as Mr. Dhanil has discussed consistently in our past conversations also, we want to emphasize that our business is more amenable to be evaluated on longer term basis rather than quarter by quarter, and also as a whole rather than part by part. Thus, we continue to reinforce this message by bringing to your attention at the company level performance as opposed to dosage form wise performance. So our action plans are in place and we are progressing on the various dosage forms, including injectables. With regards to your question on the margin expansion, Komal, if you want to add.
Yeah. So in terms of margin expansion, as we have mentioned in the past, we see that we expect the margins expansion to happen. Exactly when the correct operational efficiency balance along with the revenue and capacity expansion hits is difficult to mention the timeline, but we see margins growing as you have been seeing consistently.
No, I appreciate the point of not disclosing utilization, but I think last 2 quarters we were talking about increased cost depreciation because of the injectable plant. So I think it would be really good to know that, how that cost absorption is happening along with the scale up, even if you don't want to talk about specifics, because we were talking about those factors in the last quarter, right? So.
Last quarter, we gave injectables revenue detail. We did not give any other detail, and that was in line with what we have been saying for earlier all 3 quarters. Last year was our first year of injectables facility commercialization, and that's why we promised 31st March, post 31st March call, we promised all the investors that we would give injectables revenue detail at the end of the year, and we delivered. which was not a very, encouraging number. But we don't intend to, in addition to giving the vertical-wise details, which we continue to give right from beginning, we don't want to add up another thing. Last quarter, that was the reason why we discussed. Depreciation, of course, main depreciation increase was coming in from two factors for first 3 quarters, which was injectables depreciation. We never give injectables depreciation as a separate number, but we maintained that most of the increase is because of injectables. In plant 4, there was also additional depreciation coming in from plant 2 extension capitalization. This year also, the reduction, if you see, is coming in from mainly the injectables and also some portion of plant extension. That much we can mention, and we can continue to mention, Vanil, but we don't intend to continue to give the exact ramp of details for every dosage form, which we do not do earlier also. We don't give tablet, capsule, liquid, sachet, like such details. In past, we have never given.
Okay. Got it. Appreciate that. Second question is on the, I think in the commentary, we talked about the export market and some steps that we are taking. So if you can dwell more on that, so I think export numbers have been growing, but still, I think, it's still relatively smaller compared to the scale, in the other two segments. So if you can talk on that, and how do we see the journey from here?
Sure. While, this quarter also, if you see, our growth has been good, but of course it is a small base, and we really have, to unlock more markets and unlock more products in our ROW segment. So the rest of the Asia, the CIS, the Africa, these are the markets or the geographies that we are active in, and we have been adding more and more dossiers, so getting registrations done, as well as getting renewals of our existing products done in these markets. Some new markets also we have been trying to open, so the registrations are expected. Most of the regulatory authorities don't really give timeline commitments here. So, we have been waiting for some of them. In the past, we had also talked about, in licensing of certain MAs for Europe. And those are also, in the process of transfers where the regulatory authorities, the filings have been done, and we are now in the wait mode to get the transfer approvals. So there is a lot of work going on in the background, and we are optimistic, and we are expecting that as each of these various filings unlock or approvals come through, we will be able to commercialize and expand our vertical over there.
That's very helpful. I have more questions. I'll come back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Sudarshan Padmanabhan from Ask NDPMS. Please go ahead.
Yeah, thank you for taking my question, and congrats on a good set of numbers. So my question is, just taking forward from the previous participant, not necessarily dwelling on numbers, but if we are looking at utilization of the injectable plant, probably, how have we seen the ramp up in that plant? And, just taking forward your comments in terms of, one is, of course, new plant addition is, very good for us. But how has the wallet share improved in the last, 2 to 3 quarters, if you can qualitatively give some color on that?
Yeah. So, Sudarshanji, basically, the CDMO space is not very well documented. So, even for us, we don't, while we can track how each customer is increasing or in contribution to us, or in magnitude in terms of how much, business we are able to attract. But wallet share is very difficult for us to know, because, there is no real set of published data, and also customers also don't like to disclose, what percentage or what is the total, outsourcing they are doing. So hard to answer that question. So on our side, the way we look at it is more in terms of, the client concentration being an important factor. So since we are a B2B, business, our internal metrics have been around ensuring that we don't have over-dependence on any one customer. So we have been, over the last 4-5 years, consistently improving in reducing the contribution of our topmost client. And this quarter also, we are staying in line. All our growth is coming from distributed set of clients. It is not, a significant or chunky growth from one business or one customer or one product. And so that way we are maintaining the health and the focus of broad-based, business development in this vertical. In your third question was around, the utilization levels. So on the utilization levels, we are in, not much is changing because of, one quarter is very small period for us to say. So if you look at, our last year's, numbers, then we are within range of similar utilization.
Sure, sir. The reason why I was asking more on the wallet share and the interest from customers is, the Schedule M, which is, intending to be, more implemented aggressively with time. So just wanted your sense more qualitatively, from your interaction with the clients. That is the ecosystem gearing up towards, this Schedule M implementation, focus on more quality. I'm trying to understand the polarization from unorganized, inefficient players to organized. Is it, starting to move?
Sure. I think you hit on a very important point, Sudarshanji, that, even when we first got listed, this was one of our important thesis that given the very highly fragmented nature of the contract manufacturer industry, very large number of people present, and the increasing quality pressures, we definitely expected that it should lead to more benefit towards the organized players. Now, if you look at Schedule M, there have been a lot of changes done in terms of quality expectations. They are on the infrastructure side, which needs capital. They are on the, day-to-day reporting and, defect monitoring and reduction side, which requires competent manpower and systems. And they are on the, soft aspects of actually doing, the actual tests being, the quality tests also being enhanced. So Indian Pharmacopoeia has also been revised. So more tests are required to be done. Dissolution test has entered in almost all domestic supplies. So, all of this means that there is more cost, there is more oversight, and there is a focus on, more careful execution. And, this is where, the investments that we have been doing, Windlas, since many years, whether it was our, electronic systems, moving our QA and QC to electronic systems, or whether it is our infrastructural investments, the new facilities, or even the upgrades to the older facilities. And, even on the manpower side, where we have very strong, performance-linked compensation, both in terms of variable pay as well as in terms of equity-linked compensation. So these are very important things that we have been laying the foundation, and we hope that as this structural change of new Schedule M continues to implement and the government becomes more and more stricter over further years, organized companies and people who have this forward thinking should benefit. And so that's how our thesis has been, and we continue to believe in that strongly.
Sure, sir. So one final question before I jump back to the queue is today when I look at the raw material prices, whether it is chemicals or APIs, lion's share of the prices have actually come down. And, broadly, if you look at the CDMO business, it's a cost plus business model. So just wanted your thoughts whether, is this something, that you would be looking at, or is it something that doesn't really matter in the overall scheme of things, that something goes plus and something goes minus, but business goes as it is?
We can give you the reference of last 10 quarters. There have been quarters when API prices went down a lot, and there have been quarters when API prices grew. Net in the longer scheme of things, as you rightly mentioned, we don't see a solid impact as such, because you end up reaching where you want to reach by doing more volume when API prices are a little bit low. But that ultimately gets also, when you see API prices rising, really your growth percentages don't go haywire. So net in the long term, you end up being positive, good. So we continue to have that optimistic sense. That doesn't change because of API prices going down.
Yeah. And also one more thing is that, all our facilities are general category products. So we are not in antibiotics. And a lot of the fluctuation that you see or hear about API prices, because antibiotics are very high value, high volume and high value.
Mm.
So therefore, those companies which are having those dosage forms will have a greater impact, because we are mostly general. So, impact tends to be not so severe that we, point it out.
Sure, sir. Thanks a lot. I'll join back.
Thank you. The next question is from the line of Vilina Jain from Perpetuity Ventures. Please go ahead.
Hi, sir. Can you highlight the progress which is there on Plant 6 and the commercialization of the same?
Sure. Plant 6, we had acquired sort of a facility, and we are now in the refurbishment, phase. We expect that, it will be about at least maybe 2 to 3 more quarters before we do the mechanical refurbishment, and then we will enter the validation period. But given our, understanding, we are completely on track, so there is no slippage there. But we are expecting also how to bring it sooner, so that we can cater to the business requirement. And in terms of capex, maybe Komal, you can also share the budget and those aspects.
Yeah, capex plan that we mentioned earlier is on track. So 40 to 50 crores capex is what is planned for this plan.
Okay, so we can expect the commercialization then only in FY27, assuming 2-3 more quarters of refurbishment and validation.
It is possible that, phase-wise, there might be areas of the facility we might be able to bring up sooner. But, we have not, we want, obviously, to be able to do it like that and bring some benefit in this year. But, yeah.
Okay.
The
And on the capex,
the full facility, in terms of all the areas and all the sections, will mostly come up in next year. But we should have some portion of the facility being able to cater to our requirements this year also.
okay. And on a fully commercialized, optimized capacity, what is the asset turns which we'll be expecting from here?
So other than injectables, with our existing plants and Plant 6 capitalized, we should be able to deliver 1,000 crores revenue. There might be some upside coming in later, Vilina, on the basis of our past experience, where some efficiency improvement we are able to bring in at a later stage on the basis of process improvements and, optimizations that are possible in the plant. That should be a later thing though. To start with, as soon as plant 6 is capitalized, we should be able to easily deliver 1,000 crores aside of injectables.
Okay. And given that we are optimistic on the injectables progress, do we have any plans on the phase 3 expansion currently?
No, currently we will trigger that expansion. See, we want to be very careful in terms of the new areas that we are opening. So plant 6 is the most important capex that we are doing. We need to successfully finish this by this time. And then as soon as the orders require us to do expansion on plant 5 injectable capacity, we'll do that. And that is a much smaller time frame thing because from the facility wise capabilities, utilities and all that area is already built in. We just would add the machinery and qualify it.
So that wouldn't take more than a quarter or two, right?
Yeah. Depending on what machinery we go for, yeah.
Okay, understood. And lastly, on the trade generics business, so although on a YOY basis we see a growth of 25% for the business, on a QOQ basis, it's been a bit lower. So on an annual basis, can we still see like a 200 to 225 crore run rate for this business?
So, Vilina, as you know, we are not giving a guidance. But what I want to say is that even if you look at the past few quarters, there has been variation in TGX revenue. In some quarters, we are able to, ship and meet the deadline for some of the tenders. And in some quarters, there is a seasonal effect in our geographies. So I would think that the base is still not so big that we can go, quarter by quarter kind of a trending. We still are just beginning to build this business. And so my sense is that we should look at it annually. And we are definitely committed to growing and building this vertical, very strong vertical for Windlas.
Understood. Thank you.
Thank you.
Thank you. The next question is from the line of Avnish Burman from Bulgaria. Please go ahead.
Hi, good afternoon. Thanks for taking my question. Komal, is it possible to split the 18% growth rate in CDMO into volume and pricing?
Yeah, it's mostly volume-driven growth, if you ask me. There will be a very small portion which is driven by because of prices. It's mostly volume-driven.
Okay. And as you mentioned, the bulk of API price decreases we've seen in antibiotic side, which you don't deal with. In your portfolio, the API prices have not moved too much this quarter. Is that a right assumption to make?
No, they have.
No, they have, Avnish. In our portfolio, we are dealing with almost close to 400 different APIs, right? So, all the prices are also dependent on what is the volume that one is buying at, and also what is the supplier base that one has got in a certain API. So that's why, it's very, very complicated, and we don't want to say that, that there is a trend of which is impacting, growth in terms of.
If everyone is wanting to give us the credit, we did work more to deliver this kind of growth. We agree.
Yeah. I mean, I know it's complicated, but I mean, if you have to put it in simple terms, even if there is like a little bit of API price decline on a blended basis, that means your volumes would have grown even more than 18%, right? That's what you're indicating.
That's correct.
That's correct. Yes, Avnish.
Okay, great. The second question, I don't know whether, Komal, you mentioned in your opening remarks or not, but I just wanted to know the reason for the depreciation decrease this quarter sequentially. And is this the current run rate before the depreciation for Plant 6 comes in, whenever it comes in?
Yeah, both are correct. So depreciation reduction remains the same reason that was the reason of increase last year. So injectables capitalization that had happened because we do use WDV method. In initial years, we end up having more depreciation impact, and as the years pass by, the overall depreciation tend to get lower. That is what is exactly happening in our case, and that's why a depreciation reduction. And you are right, this is without the depreciation impact of Plant 6. So whenever we capitalize Plant 6, there will be some depreciation impact coming in.
So, yeah. I mean, before that impact, this is the run rate for the existing business as of now.
Yes, this can be considered as a base run rate for this year.
And I think Hitesh mentioned that some phase-wise commercialization for Plant 6 will happen in the fag end of FY26. So that is when the extra depreciation starts kicking in, I'm guessing.
Yeah, it should. So whenever the capitalization happens, accordingly for that portion of the year, depreciation impact should come in. You are right.
Okay, thank you so much, and congrats on a good set of numbers. Thanks.
Thank you.
Thank you. I request each participant to ask 2 questions. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a good set of numbers. So, just wanted to check with you, last quarter we had 6 crore of revenues from the injectable segment. I know that you are not disclosing the numbers, but are we growing on a QOQ basis on this number, or it has remained a steady range around that?
Because we have given last quarter the revenue, Q4. If I mention that would kind of be giving the numbers, which I would want to avoid. Maybe, so that is the only reason we don't want to do it, although we want to emphasize that we continue to make progress on the action plan for improving capacity utilization for this facility. So
the improvement, okay, so they're improving as capacity utilization is improving quarter on quarter is what you are saying.
So, Ankit, the issue is that, we want, whatever the injectable, progress that we are making, we are definitely, trying to accelerate, and the actions required to do that, which is the more companies auditing the dossiers, more companies, auditing the plant, approving, giving us the POs, all of that is in progress, right? So, it is something that, dosage form wise, we don't want to, begin the tradition of giving numbers, because anyways, all our business, the facility is also supporting CDMO, it is also supporting our trade generics, eventually, for exports also it will go. So that's why we are not providing the dosage form wise revenue breakups or cost breakups and things like that.
So any thoughts on, we can double our capacity in injectable by putting up another floor? So have we reached the stage that we would be taking a call on expansion on the injectable part, or it's too early still?
We would do that when we are very close to the peak utilization of the facility, right? We are definitely not there yet.
At least FY27 you will not take a call on that, and most probably you will take a call in FY27 is what we can think of?
No, we don't know. Honestly, at this point, we don't know. It can happen sooner or it can happen later, which depends on when we see peak utilization limits reaching, as I mentioned, which is close to 100 crores of revenue from this. So when we see that kind of a run rate hitting, then we would, even when we see like a couple of months later, that is where we are going to reach, then we would start off for the capacity expansion. And as earlier mentioned by Hitesh, that is not a very long process. It should be maybe 2 quarters is the kind of timeline it should take for us to do that.
Sure. My second question was on the cash utilization. So it's been a very long time since we've been, accumulating cash and have a very large kitty with us. So any thoughts on how we'll think about utilizing it or distributing it to shareholders? Any progress on that front, or have you taken any call on it yet?
Yeah. So since we got listed, we have maintained compliance with our dividend policy, which is distributing close to 20% of the profit, which we have done consistently, and we hope to continue to do that in future as well. Saying that, second thing is for M&A transactions also we have been exploring, but we don't want to rush it. We did not come across something solid. So we are not even in the final stages of some opportunity. But we stay open to sharing the wealth with all the stakeholders. That stays on cards. And if we come across some opportunity, we would go for that. If at all, we are able to, completely stabilize injectables business as well, and Plant 6 is also up and running. By that time, if we don't see any inorganic opportunity really clicking in, we would go for capex on our own for some other dosage form. That's the plan.
Sure. Okay. Thank you, and wish you all this.
Thank you. The next question is from the line of Nirali Shah from Ashika Stock Service Limited. Please go ahead.
Thank you for the opportunity. Just from the previous participant's question, I wanted to have a clarity. What could be the peak utilization for all of the facilities on a blended basis? Currently we are in mid-60s range.
There's a lot of background noise. You're asking about peak utilization
for all the facilities.
For all the facilities on a blended basis.
Yes.
So I think that in the last year's...
can I request you to mute your lines when you're not talking? There is a lot of background noise. Yes, thank you.
So we are in the similar, utilization levels, because, if you look at, Q4 versus Q1, the revenues are, that way. So our revenue and utilization are going to move hand in hand because most of the growth is coming from volume. So automatically you can sort of triangulate it.
Yeah. So the moment Plant 6 is ready, we are ready for 1,100 crores of revenue at peak utilization, but we see that there might be some, upward possibility in that as well.
Okay. And next one on the exports. So we did grew 45% YOY. Should we view this as a sustainable growth, or was there any one-off element in this quarter?
None of the verticals, as we earlier mentioned, we should look at the quarterly growth number and consider that as base. It's better to look at in a long-term scenario. For all 3 verticals, we say that and maintain that for the ones where there is good growth percent and the ones where we might not be very happy with that kind of growth percent. Both, no point looking at the quarterly growth number. We stay optimistic on exports, but what kind of growth percent number, as you are aware, we don't really give the guidance for the upcoming periods.
And there was no one-off element, right?
No one-off element.
No one-off.
Okay. And just a last one, because you mentioned that usually...
But I request you to rejoin the queue for the follow-up question, as there are many participants on the queue. Thank you.
Okay.
The next question is from the line of Nitin Agrawal from DAM Capital. Please go ahead.
Thanks for taking the question. So, Hitesh, on our branded trade generic business, if you can give us some qualitative sense on, so over the last year or so thereabouts, how has the portfolio expanded for the business? And from a geographical perspective, how has been increased the area that you've been reaching out to, or number of distributors that you've been reaching out to?
Sure, Nitin. In terms of our portfolio, we have an active portfolio of somewhere around close to 200 plus products, and we are also increasing this. My sense is that to really have there's still a lot of room to grow in terms of portfolio also for us. So it happens stepwise. Some of the larger companies, if you see, they have a portfolio of more than 600, 800 products. So there's a lot of room for us to grow there. In terms of the geographic areas, we are still mostly, focused in the north, where UP, Bihar, Madhya Pradesh and Rajasthan. These are the areas where, we have been, more successful. And we are now also looking to have more push and see how we can activate and strengthen the other states. So that progress is also ongoing. In terms of our distribution network, again, just based on between last quarter and this, so Q4 we had already talked about close to about 1,000 plus stockist network that we are working with. So that number, last 3 months, no significant change over there. So this has been more on the increasing the depth of more products. The growth is on that, and there are obviously some seasonal aspects between Q4 and Q1. But the longer term view is, Nitin, to have more than 5,000-6,000 stockists in order to be able to cover India in a justified way. And that requires more products also that will be able to put more products also when you have a larger network, and of course requires the strengthening of the team and all those things.
And then, since you mentioned that, do you think that it will be feasible for us to hit that kind of distribution for reach?
I'm sorry, I could not hear that question correctly, cleanly. Can you please repeat?
Nitin, can you please be a little louder? We can't hear you properly.
I'm sorry, I was asking about, since you mentioned that up to 5,000-6,000 distributors would be an aspirational number to get to make a optimal reach out on trade generic business. How much time do you think it will take for us to get there?
So, Nitin, it really depends on, a lot of times when you appoint a stockist and you start the business, you realize that the stockist, the payment cycle with him works with us or not. Is he, as organized as we would want him to be or not? Is he as aggressive in his area to, push the products? So there always is some number of stockists that you end up, dropping, and some number of stockists that you keep on adding. And so we have to, and because we work with a very small sales force, we don't have like a huge army of, medical reps like branded generics companies. So if you have to be very, very particular in understanding the flow of goods, what kind of products the stockist is selling, how quickly he is able to liquidate which kind of products. And based on that only you increase the exposure with each stockist. So this is going to be a sort of a nucleation and a growth kind of a model. So you nucleate few and then see which ones of them grow and then keep on expanding. So it's not like we don't want to say that we are less aggressive in terms of appointing and trying out new stockists, but we also have to be very importantly careful and make sure that the health of the business is appropriate and we are not dumping inventory or there is no, expansion is justified under the right health reasons of the this thing. So my okay, when one could do it, immediately also, but there will be a time we will build it strongly. So.
Thanks. And the last one, Hitesh, on this, in the markets where you're operating, what's the experience been with the competitive intensity? You see any major changes? Has it gone up? There's been a lot of companies, at least the larger listed companies also seem to be interested in scaling up their branded generic, the trade generic game. So have you seen more competitive intensity increasing in some of this business?
Yeah, I think that, as more and more companies jump into the fray, the branded generic companies have sort of a dual problem to solve. One is that they have to build a new vertical, which is, working on slightly different, way as opposed to their branded generic. So you are not meeting the doctor, so it's a different, capability. Second is that when they sell low price products, even if they are branded differently, the same product goes and cannibalizes their branded generic revenue in their core markets also. And we have seen large companies talking about, even in their earnings call, rejigging the distribution network because of this cannibalization issues. So it's not a straightforward thing where anybody who jumps in is able to, secure those wins. But yes, this area is getting more attention, and one of the things that I'm actually quite happy about is that the perception that trade generics are poor quality products, that is going away. Because as more and more companies are looking to come in and bring products into the trade generic vertical, the acceptance is increasing. We are seeing more, even patient level, acceptance coming up when people go onto the, websites, online stores and see same product available at various different prices. They ask this question, and some of our stockists come and say that, okay, your product, even though we are not putting them on, the 1mgs or the Farm Easies, but they are now there, and locally the stockists are pushing them and are able to generate business. So my sense is that this vertical is going to grow, and India needs it too, right? Because a huge population is living in these villages and kasbas, and I have spoken in the past also. Allahabad has 3,000 villages in one district. How are you going to cover it with branded generic medical reps? So there will be a huge, market opening that we believe should happen, and enough room for everyone to grow. And yes, of course, competitive intensity will also be there.
Thank you so much, Tesh. Best luck.
Thank you. I request each participant to ask 2 questions. The next question is from the line of Veer Vadera from Niveshaay. Please go ahead.
Yeah,
Mr. Veer, are you
good
there?
afternoon. Congratulations for a great set of numbers. So I have one question. If we look over the period of time, the company's product mix has evolved and the overall share of CDMO segment has been declined a little bit. Even though it holds a significant revenue potential in future, how should we view this trend going forward? And also I wanted to know the margin profile for each segment, like CDMO, trade generic and export side.
So the margin profile stays similar within the verticals. We don't see a huge change that has happened. A little bit on higher side, I would say, but not not a significant change for me to really mention. In terms of how we see the growth, honestly, I'll tell you how we look at it internally. We are looking at all the 3 verticals where there is infinite potential for us to grow in all 3. And we are trying our best to, to push all the three segments separately. Whichever we are able to execute better, we are very happy. And so that is how we look at it. We don't want to, gun for a growth of a particular vertical more than the other. That is not how we look at it, because we have, of course, separate teams and we have separate strategies for all three verticals, and we are trying to push all three.
Okay. Thank you. Best of luck for the future.
Thank you.
Thank you. The next question is from the line of Amit Agicha from HG Hava. Please go ahead.
Yeah, good afternoon.
Good afternoon.
Yeah, thank you for the opportunity. What's the current books?
Sir, your voice is cracking.
Madam, am I audible now?
Yes, please continue.
Yeah. So my question was like, what is the current order book size in value and volume terms, and how much is from repeat customers versus new ones?
Yeah, this is a competitively sensitive information, so we are unable to share this.
Okay. Thank you. All the best.
Thank you. The next question is from the line of Shreyansh Jain from 3A Capital. Please go ahead.
Hello.
Yes, sir. Please continue.
Yeah, thank you for the opportunity and congratulations for a good set of numbers. So my first question is that could you throw some light on our strategies
Sir,
to
can you
compete
please be a little louder? We can't hear you properly. Mr.
Hello.
Jain? Yes, please continue.
So could you throw some lights on strategies to compete with pharma giants like Cipla and trade generic segment?
We are not always competing, right? So first of all, I want to also, in light of the prior question, so Cipla has been doing trade generics for last 40 years, right? They are the largest with 2,500 crore kind of revenue. We would love to make Cipla trade generics in our CDMO vertical, right? So when Cipla grows and we are able to supply to them as a manufacturer in CDMO, that is a win for us. And yes, when our product goes in the market and that is seen as a product coming from which is having authentic quality, affordable price, and accessible, then we also win some market share in our trade generics vertical. So the goal is never to have a winner takes all. And in these complicated markets, Cipla is, even though it's been around for 40 years, but Leaford is also about the same size, which they have built in the last 15 years. So how could Leaford build a business when Cipla, was the biggest giant out there? So, I think the idea has to be a huge opportunity, and also this execution. It is about your team, your products, the quality, consistency, your relationship, your managing the sales channel, how you are, incentivizing your people. So a lot of those things have a play, and that is part of building the business.
Okay. And could you highlight the market size of trade generic segment in India?
Again, it's not covered by IPM or any of the larger sort of data providing companies, but there have been some estimates talking about close to 35,000 crore kind of a space. But I don't really know whether that is validated or not.
Okay. And do we see any challenges in terms of CDMO business if the US impose tariffs on Indian players who is our clients?
No, not at all. In fact, I think that one of the good things about us is that most of our business is in domestic market. So in some sense, neither our customers' domestic market business nor our domestic market business is really impacted by the international tariff kind of issues. So we are somewhat insulated, although we don't have opportunities to sell in those markets either. But we are somewhat insulated by these kind of, things.
Okay, understood. Thank you.
Thank you. The next question is from the line of Paras Cheda from Windlas Biotech Ventures LLP. Please go ahead.
Yeah. Thank you for the opportunity. Sir, congratulations for a strong set of results. Just to clarify from my understanding, did I understand it correctly that our peak revenue potential, including the plant 6, but excluding the injectables, is about 1,100 crores?
No. Including the injectables, that is 1,100 crores. Excluding injectables, it would be 1,000 crores. Injectables about 100 crores. That is how we are reaching 1,100 crores, including injectables. However, I also mentioned that through efficiency initiatives that we generally drive, and in past we have seen that happening in plant 2, there might be some upside to this number in practice.
Okay, so this is also inclusive of plant 6 potential.
Yeah.
Okay. And again, for clarification, if you don't come across any inorganic opportunity, because you've been, I think, sitting with this cash for quite a long time now, this will again, get into organic capex mode once again.
So, the way we think about it is, we want to do strategically more dosage form expansion. Injectable was the first one. Plant 6 is, expansion of the core. So oral solid, again, we have done that. But, once we have used up plant 6 capacity, and we are seeing the line of sight to that, and injectable is also ramping up, we would love to then add another dosage form. And if we don't find a inorganic, then we would want to build and obviously grow. So there will always be phase-wise, very judicious but very thoughtful use of capital for organic and inorganic in that manner.
Right. And when you say another dosage form, you mean injectables, or it could be another?
No, another.
Another dosage form. So like we don't have so many dosage forms that we are not currently in. Steroids, hormones. We are not in soft gel capsules, inhalers. We are not in eye drops. We are not in so many ointments. So there is a lot of room to grow, and our strategy is that as we add a dosage form, it should cater to all three of our verticals. So we have to be able to use it in TGX institution, in CDMO, as well as in exports. So that's why we want to, keep going that way after stabilizing each step.
Right. And is it fair to assume that this injectable facility, the margins over there are relatively better, compared to this one, oral solid drug?
Yeah, on a fully developed business, the gross margins for injectables are higher. That's the industry sort of.
How much percentage would you put it on EBITDA margin?
If you look at some of the pure injectable players in CDMO, they are operating somewhere in the range of 18 to 21% EBITDA.
Right. So potentially at least 10% of our revenue could be at least high teens to 20 in that region, potentially.
Potentially, yes, once we execute and are able to get it.
Yeah. And just last query from my end, in terms of, broadly revenue growth over the medium term, let's say 3 to 5 years, and you will have some capacity organically or inorganically that will keep coming up. And there is this market growth that we are seeing. Right? So, what kind of revenue growth you sort of not really project, but, aim towards over the next 3 to 5 years kind of a thing? On a, sort of a CAGR basis, something like that. Even where the market is, given the trends in the industry, etc.
Yeah. This is, we don't want to sort of, say that we are not giving a guidance and then give a guidance. But I think the right thing, sir, is to look at our past performance in the last 10 quarters, how we have delivered. And, our aspiration is always do better things. And we will continue to do everything that we can, staying committed to the same, without saying that this is the number or that is the number that we are aiming for. We are trying to leverage every opportunity, unlock avenues for growth, and at different points in time, there will be different activities that we have to focus on to get there. So, but we see room for growth in every vertical.
Right. So, for example, what we see, if you look at the historical growth itself, over the last 2 years, financial years, we've grown by 50%, for example, broadly. Right. So the current industry setup, the dynamics, the way it is, some sort of a historical growth rate that you point out, there is that room to grow further, the way the industry is poised and the dynamics that are there currently.
So, while there are challenges, there are also opportunities, right? As we also discussed that higher quality systems and higher quality demands are pushing pressure on, the smaller manufacturers. And so there is probably, sort of a downwind that benefits that we organized players like us will get. Second thing is that, the growth in trade generics, not just for Windlas, but for many other people. So that is undocumented in the industry growth numbers. So as that grows, again, we will have, more opportunities to grow. And third, which is actually probably one of the most important things, if you look at the top 50, India listed companies, and if you ask them who is doing CapEx for their domestic market, probably the answer will be very, very, very few. Because there is a strong base of, organized suppliers or contract manufacturers like us. So unless companies so we see all these signs as opportunities. And of course, competition is part of life, right? So, you have to always, price right. You have to always deliver and meet the service expectations and, grow that way. So that remains the same for everyone.
Yeah. So, just to clarify, we are not saying that we would maintain the growth percentages to, kind of say that maintain the growth percentages that we have given in last 2 years or last 5 years or last 10 years. The CAGR and the percentage growth and the averages would be very different. So what we are saying is we can only commit to you that we would continue to make our efforts. We would continue to do stuff that is good for company in the long term instead of looking at the short-term picture. That is what we are committed to. That is what we have been doing. And so that's why just to, while we see all the growth possibilities, we don't want you to assume from our answer that there is a particular percentage of growth. Bettering the growth percent is not what we are saying. It might happen or it might not happen. That is not something that we know. What we are internally pushing might be a much bigger number, but we don't know if that is going to happen or not.
No, I understand that. I've been tracking the company for the last couple of years now, although I missed this last quarter. But I must admit that this is one of the most very well managed companies, at least among what I have come across. And, the management is excellent. Now, the only one thing that I think, and again, because you are better at your industry, but that there could be a little bit of that, aggressive move towards capacity expansion given our investments where we are, the cash that we're sitting on. But all said and done, it's of course up to you all, but it's one of the best companies. So I do understand it's difficult to project, but just a sort of a trend that I was looking out for in terms of where do we stand and, the industry growth.
Thank you. Thank you for the kind words.
Thank you, sir.
Thank you very much, ladies and gentlemen. Due to time constraints, we will take that as the last question for today. On behalf of Windlas Biotech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.